All right, everybody, welcome to the Smart Money Closing Call with Invest with Jacob. My name is Jacob Gabbard, and we do this every Monday through Thursday. Monday through Wednesday, we do it at 3:55 p.m., and then on Thursdays, today, we do it at 3:30 p.m. A little bit early, as I have to take my daughter to gymnastics. We cover the S&P futures, the NASDAQ futures, and two charts of your choice. I can see we have two already in there. You got to get here early if you want your charts done, or you can super chat them, and I'll do those as well. Nvidia earnings popped the market up, and now the bulls are going to face a pretty big test. We'll go over that in just 1 second. First, we had on our short side of Squeeze Sniper, which is still in testing right now, but still doing really well. We had a short on the NASDAQ overnight at about 10 o'clock, and that was a 54-point win. 80 points on the second part of that, 50 on the first part. Really nice win on the NASDAQ there to the downside. And then it was choppy a lot of the day, and we didn't get a setup that we needed for the long side. On the ES, we had both a long and a short. The long side triggered for a 8-point win, then stopped out. The short side triggered and hit both profit targets. Ended up being an 8-point win on that one. So Squeeze Sniper continues to crush, guys. If you don't know what it is, check it out in the description below. There's a link, and it's on sale for 20% off until the short side gets fully baked, and then it's going to $97. So make sure you take advantage of that. All right, commercial over. Let's check out the markets. So they gapped up today and rejected resistance. We talked about this. I said that yesterday we were building a bear flag, right? And that energy is put in there until they break out of that flag. They broke out to the upside. And then I said, if that happens, this is a very common A-B setup, and we could look for C down after that. They got just above the 74.40 or 77.47, 50% retrace of the S&P here, futures, and rejected that, and now they're coming back down. They're sitting at about 77.35 overall. The bulls had every chance to break out and run today. They reached resistance and failed there. So they're facing a big test as we head into Jackson Hole tomorrow morning. Jackson Hole will be a big catalyst for the market. Which way? To be determined. But as it stands, this is very corrective price action down here at the bottom. So off of the low, you have very corrective price action, which typically leads to a lower outcome. At least a swipe of the lows before they start to move back higher to rebuild the structure. When you don't have good structure, the market struggles to make new highs. Can they go higher than they did today? Absolutely. 77.70 is actually 69, but I'll call it 70 because I like round numbers. 77.70 is the next major target for the bulls to get through. That's the 618, and that's the very common target for a bounce. So you have this ledge that they came up to on the 4th. They failed it. They closed at it, or they opened on it and then closed below it on the 5th. On the 6th, they came up to it and failed below it. Here they got above it. Here they back tested it, couldn't hold above it, closed exactly on it, pushed exactly off of it, closed exactly on it, back tested it and failed, back tested it and failed. 77.70 is a big number for the market. It's also the 618, as we mentioned. And very common to see the A wave down turn into a B wave up, turn into a C wave down like this. So the bulls face a big test. If they can get through 77.70, the bulls start to take the keys to the car, and they're approaching 7,800. 7,800 is where we truly broke down from. If you look at the tops of all of these wicks, they all come to 7,800. This one spikes above it and comes down. This one's just short, and then they come up 7,800, 7,800, 7,800, get above it, 7,800, and then they lose it. So 7,800, 77.95, however you want to look at it, same area. That's going to be the kind of final milestone for the bulls to cross. If the bulls are able to get above it and then accept it, then we should be looking at 8,000 overall. If they reject 77.70 or today's high, either one, they don't have to go to 77.70. If they reject today's high, which is also a big resistance zone, and either turn down sharply now or they come back up and do this, either way, then we will be looking to test these lows again down here at around 76.60, and ultimately looking at a breakdown of because of a failed breakout. So you made an all-time high here, pulled back, made an all-time high and failed to break out, lost it back below this. So it's a failed breakout. Very often that comes down to the bottom of the range. So if they lose this series of lows, there is support at 76.20 and there is support at about 76.40. Up here, that's kind of the wall for them to get through. The weekly 21 is at about 76.40, and then 76.20 holds the top of this ledge right here. You can see they came up to it several times and failed it. That should be support. If they can't hold that, then look out below. So that's what you're looking for to the downside. 76.20 to 40 is your support down should they break below this set of lows. If they break below that, we're very likely accelerating down into this area here over the next week or so. To the upside, again, they got to get through 77.70 and then 7,800, but through 77.70 and the bulls start to take control. They fully are in control above 7,800. Any questions on the ES? On the NASDAQ, and if you're sitting there saying, hey, Jake, you just gave us both an up and a down path, how the heck do we know what's going on? Why do you say that? Is it so you can be right? No, it's not. I don't care what the market does. I don't care if it goes up or down. I care that I make money trading. And making money trading is about key levels. You can see the key level here. We drew a line. They came right to the line. They spiked below it, reclaimed it, and bounced off of it. These are the levels you want to know. They're very important. In this case, it's 29,220 is the level to the low side. If they lose that again, they're very likely to come down to the low at 28,954 and break down that way on the NASDAQ. And if they break here, they are very likely going to accelerate to the downside. If we look at the weekly chart, they're kind of right on it. They're right on the 8 right here. Well, they bounced above it today a little bit. They were right on the 8 yesterday. They bounced above it today. So if they lose those lows, that means they've gotten below the 8, above the 8, and then came back and took it out. And then they'd be sitting right into the 21, which is at 28.8. That's your next level of support. And then if they can't hold there, we're very likely heading down to 27.2, and usually in pretty fast fashion. I've gone over why that is. Go watch other videos that I've done if you want to learn price action and why that happens. But that is a trap door kind of effect should they lose 28,786 or so. It'll be a little different tomorrow because the moving average moves each day. So NASDAQ to the upside, 30,000 is the level, but they did retrace. Let's go back to the daily so we can see it better. They did retrace the 50% today, which is a perfect retrace. They rejected it, not as bad as the ES, but they did reject it a little bit. 29,652 is that number. They also have 29,817 above, which you can see is also a wall of resistance. They came up to it here, 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 and here. If they get through 817, then they face down the beast at 30,000. 30,000 has been a problem for this market since May 14th. You can see they came up to it on May 14th, rejected it strongly, got above it, fell back below it, back tested it here, got to it here, got above it, fell back below it, got above it, fell back below it, back tested it here, got failed, got above it, got back below it, back tested it here, back tested it here, back tested it here. Are you getting the point? Back tested it here and then fell off a cliff, back tested it here, got above it, fell below it, and now they're looking to try to back test it again, potentially, if they can get up there. 30,000 holds the keys to the bulls ripping this towards 32,000 overall. If they can't get through 30,000, then down we go. Again, breaking this low down here puts us at that weekly 21 area, just below it at 28.8, and then below that is acceleration. So be careful if they start to drift down or move down very quickly tomorrow during Jackson Hole. That's at 10 a.m. Eastern. Also, if you're in a day trade at that time, be very careful because the market can jump very fast on those types of things in both directions. So just know what you're getting yourself into should you be trading at 10 a.m. tomorrow. My advice generally in those types of events is sit it out, let it sort itself out, and then play the sustained move because they were likely to give you this, 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 and then either this or this. And then once you figure out what they're doing, you can get in safer, watch them break support or resistance, and get in the right direction. Trying to play the exact 10 o'clock move is generally account suicide. Not always. You can get lucky and be on the right side of a CPI that goes up 100 points in a spike. But when you're on the wrong side of those, it's evisceration. So just be careful. That's all I'm saying. So that's the NASDAQ in a nutshell. Any questions on that? All right. Looks like we're going to be looking at Adobe and PLTR today. Myth, welcome to the stream. Jing KRC. We'll go with that. Welcome to the stream. So we're going to do AD. Oh, we're on the wrong chart. 1 second. Let me get on the right chart. All right. ADBE, old Adobe. Adobe, look at them go. Bang. This is a beautiful chart from what I can see so far. I think we've done this one before, obviously, because I have fibs on it. I don't remember them all, though. Okay. We can get rid of this. Nope, that's the one I actually wanted. We can get rid of this. So, actually, let's not for 1 second. For the downside, they hit the 1.0, actually just below the 1.0, which is a very typical target. They also spiked and reclaimed this major support here, and boom, off they went. If you know what you're looking for in those moments, you can catch these kind of moves and be on the right side of the tape. It's really effective. It's what Squeeze Sniper does for you. It's also what we teach in my room, how those things happen. Check that out at investwithjacob.com or Squeeze Sniper in the description below. Anyway, they came down into major support here after their big giant ABC. So when we talk about the market coming down and making a bear flag yesterday, right? I said they could bounce. It's perfectly natural for them to bounce here. Boom, bounce, boom, lower, right? So all charts act and react the same. David Frost will tell you that. Rest in peace. Love that guy. Great channel over there. His son, he's trying. He's not David, though. Anyway, as we zoom in here, is it possible they're going to make a bigger run on this chart? In other words, is this, let me see where this chart starts. Way back when. 87. Okay. That's a super cycle. So you have a super cycle move up. That's a potential wave 1 to be determined. And then this could be a super cycle 2 down into support. I'm not on board with that just yet, but it's possible. And if we look and zoom in here, we would want to see a 5-wave move up. And so far, I think so good. At least what I saw when we first just kind of logged in. So as we zoom in here on the daily chart, you have a pretty nice 1, 2, 3, 4, 5. There's your wave 1. Here's your wave 2. Wave 3 comes up to the 1.0 and then the 1, 2, 3, 6, which is exactly what you want to see. It comes back basically to the 764. You're looking for the 764 to be back tested. You get it. Then they should come to the 1618 next, and they dinged it perfectly. So this is the 1618. Now from here, they can extend a little more if they want 1764, even 2.0. They can continue to extend. Remember, wave 3s can extend. We're still on 3. We would look for one more pullback from up here down toward the 1.0 at 260. You can see they set a ton of support there. And the 1.0 off the 1618 is a very common target. And then we'd look for extension to 309, and that would be a pretty solid 5-wave structure off of the lows. If that's the case, we could be building wave 1 of 3, or maybe 1 of 3. They're pretty far down, but at any case, starting an impulsive move. So Adobe has a chance to build themselves out a much bigger setup for a much bigger run in the market. Now, the key here is they have to hold the 1.0 on any pullback, and as they move up the fibs, you move up the target or the retrace target. So the 1.0 is your current target they must hold. Technically, the 764, really this low right here at 251.24. But if we're just making it basic and easy, just count fibs. The 248.80 zone must hold. That is the bottom of the pivot. So the pivot starts with the 618.764. As price moves up, it should retest off of the 1236 into the top of the pivot, which is the 764. Then it goes to the 1618. The pivot moves up 1 fib. So the 764 now becomes the 1.0. The 618 becomes the 764. You really want them to hold the top of the pivot to show strength, but they can come down to the bottom of the pivot. If they the original test didn't come down to the bottom of the pivot. They can come down to this low in general, but I'd still give them the 764 and be okay with it. So as it moves up, if they extend to the 1764, then this 1.0 moves up to the 1236. If they extend to the 2.0, we move up to the 1382 and so on. And that's how we know where we have to hold. So the bottom of the pivot is the 764. If they move up a fib, it goes to the the 1.0 and so on and so on. So they must hold 248.80. If they don't hold they must hold 248.80 and then make another high. That's 5 waves up and a solid 5 waves up. If at any point they pull back and break and do not make another high and break 248.80, then this is just an ABC. The 1618 is a very common secondary target of a C wave, and you would look for them to pull back, maybe give you maybe build out a bigger corrective wave, and then we would look for them to either be building out a 50% 618 retrace or a wave forward, just depending on how that works when we zoom back out. We got to see where they're at exactly on that C wave. Since they've hit the 1.0 and swiped it and came out strong, I would look for them to retrace to 444 to 504 if it's going to be corrective. So if they fail the structure, in other words, they break back below that 0.764 fib without making another high, then the target becomes 444 to 504. If they make the 5 waves up, this would be 1 of 3. Then you'd have 2 of 3, 3 of 3, 4 of 5 of 3, and this would be 1 of 3. And then 2 of 3, and then 3 of 3, and so on. So they have the potential to build out something very bullish. However, they have to complete that 5-wave structure. Once they do that, they then have a structure they can build off of in a bigger sense, in a macro sense that would be months and years, that you could look at Adobe being a very solid buy for a long time. If not, if they fail, you could still look at shorter term stuff up into 400 and 500. We're only at 289 right now. That's still a really great return. And since they eclipsed this high at 273, it becomes and they hit the 1.0, it becomes much less likely that this is making a wave 4 with a wave 5 down. So I would be looking for them to, in general, make a bounce that comes up towards 444 at a minimum. Getting above 309, even if it's not the impulsive structure we talked about, getting above 309.40 would be the kind of key to that. If they get above that, that's actually a major support zone. You can see they came into it a bunch of places. That would solidify the fact that we're headed up towards one of these. Not in a straight line, never in a straight line, guys, like this, generally. That's generally how it goes in a corrective sense. Impulsive, a little different. All right, so that's Adobe. PLTR. Is this Palantir? Is that who that is? Yeah, Palantir. Okay, I'm going to refib this because I don't think we've been here in a while. Okay. So Palantir started in 2020, 2021, right in there. And we're looking at Palantir to be, they only hit the 1.0 of this structure here. It's possible there's a 1, 2 down here that's a little smaller, and then this is 3, 4, 5 of 3, 4, 5. So it's possible this is a 1, 2 on Palantir. I would be more inclined to believe that. If we look at that structure off the low, where this is a 1 and this is a 2, it's not a very big pullback here. They've only hit the 382, so they could continue here in wave 3 of 1 of 3. In other words, this is 1, 2, and they're building out 1 of 3. 1 of 3 typically hits the 0.5 to 0.618 extension of 1 and 2. So I could see them coming up to this 208 area, which is the previous high, and rejecting in wave 2 of 3, and then trying to break out, which means get to the pivot and go. That would be the most bullish path on Palantir. A secondary path would be the diagonal path that they were building out, the other structure that I kind of had on here, which this one too makes more sense, but it doesn't work. So they get to the 1.0 and they break the 618, so it's a failed impulsive move in a direct sense, but it could be a leading diagonal. You see that a lot on new stocks where this is 1, 2, 3, 4 into wave 1 territory because it's a leading diagonal, and then 5 usually comes up to the 618 area right here, so this would be wave 5. Then you'd have a pretty sharp sell-off, most likely back to the 66 zone or below, and then you'd look for a 5-wave move up for 1 of 3 on Palantir. So they're kind of in between, whether they are in a very uber bullish bigger 1-2, or they're in a diagonal type structure, which will be a little bit choppier. In that case, I would look for them to still fail the high here. So I'd look for them to come up, fail in a B wave, and then C into the 1618 at 260. So remember, you got 1, 2, 3, 4, 5 like that. Questions on that or Adobe or other questions at all? R. Smith, afternoon. 4-hour chart shows Palantir hit higher. I don't know what that means. It hits as high as it hits, so I'm not sure what you mean by that, but at any rate, that's the breakdown on Palantir. 4-hour chart hits top at 222. Strange. That's very odd. I wonder if this, oh wait, is this at 4 a.m.? Yeah, this is after hours trading, so that doesn't matter. We don't count after hours trading. That's why. Okay. They hit that, and that was earnings, and they hit it after hours, and then they fell off. So whatever they did in the after hours, all it did was really put them at the, if we go back to the daily and look at it again, if they hit 222, why did I delete the fibs? What did I do that for? That was silly. 222, I think, was like the 1236. Either way, they still come back below the pivot. Yeah, so 222 is right up in here. That's really a perfect. So the diagonal path I like a lot better because the 1236382 is a perfect target for that. So even if it was after hours, fine. They still broke down below the pivot, and so now you would look for them to hit the 618764 on this move up, but look for them to do it in a 3-wave move that probably fails the highs, pulls back, and then goes and gets it. That's what I'd be looking for on Palantir. Either way, it's the same thing. That's just after hours trading. You can choose which time frame you want. I know. I do this for a living. I know I can choose what time frame. I just didn't realize that was an after hours trade. That's all. The daily chart. The daily chart shows the current trade, and that's what that's what we're working off of, and that's what you should be working off of. After hours is all a mess. The only thing you should use after hours are things. Of course, now that they're trading 24 hours, it's a little different. Is everything trading 24 hours or just the SPY? I didn't follow up on that. At any rate, futures and stuff like that, you can use the after hours stuff on. Could the recent spike up be a B wave? It's possible. The problem you have with that is it's a very big spike of the range. So if they spike right here, they're at the 764, so they need to stop, well, now. And you'll want to see an impulsive move down if that's the case. If you don't see an impulsive move down and you see something more like this, then I'd be looking for that. Just depends on the structure of the pullback. All right, guys. So we have tomorrow's Friday. We have Jackson Hole. No closing call tomorrow, so we won't be here to discuss what happened. We'll have to see what happens at Jackson Hole and over the weekend. If there's any crazy news that moves the market around, whatever. And of course, you have the Fed. So bulls need to get through the key levels we talked about. Bears need to defend. We'll see how it goes. The bulls face a major test here, though, because if the bulls lose, it's look out below. They will accelerate to the downside. But the bulls have so far been able to hold support. All right. Have a wonderful, wonderful weekend. Appreciate you guys being here. Hope you come back next week. We also live trade every Wednesday at 9. Check that out as well.